Welcome to Chain Reactions, a weekly live stream and podcast from Visa and XYZ, the leading global marketing network. I'm your host Blake, joined by my co-host Polina, and join us as each week we explore the chain reactions happening across crypto by interviewing the leaders behind the industry's most impactful companies. We go live on X every Wednesday at 11 a.m. Eastern and release a podcast the following week. Let's get started.
All right. Welcome everyone. This is Chain Reactions. It's your weekly live stream and podcast where we talk to founders, heads of marketing, and just all around great people from around the on-chain space and AI ecosystem. Really excited today. We got Lex here from Generative Ventures here to talk about all things. I think we're at a very interesting point, I would say, in 2026, where we're talking about all things AI, crypto, how these things interact, as we're seeing agents get further and further along, and how these worlds are changing, frankly, because I think we are entering a very interesting time in human society, basically. So really excited to get Lex on here and chat all things about that. So Lex, welcome. How are you doing today?
Thanks for having me. Doing okay.
Brilliant.
I'd love to kick things off a little bit with like an introduction of so where are you, what's your story? How did you come in Web3? We know you have previously been at ConsenSys, now Generative Ventures, so would love to learn a bit more about your journey.
Sure. I've been an entrepreneur at the frontier of financial services for about 15 years. I started my career on Wall Street and was lucky enough to have the 2008 financial crisis very early on in my career to teach me that, institutions fall apart and that you have these big conflicts between how people position products and what's actually going on. And then by 2010, I started my first company, which was one of the early robo-advisors in the US, and did that for about 6 years. So kind of started in the wealth tech area. And around that time, fintech came together as a theme, like 2012, 2014, with a lot of Web 2 being applied to financial services. I ended up moving out to London, where the neobanks were started, and where there was a lot of innovation in the mid-2010s. And through my work here, ended up covering early days of Ethereum, COs, smart contracts, sort of the first emergence of digital assets in 2017, 2018, and ended up joining ConsenSys in 2019 to co-lead all of the DeFi, digital asset, and fintech initiatives that the firm had, because it was sort of a venture studio of different projects, and we were organizing and making sense of it, which was amazing because we're about to enter DeFi summer, even though we're sort of in a bear market. When I joined, I think ETH was went as low as 80, I think, and we're 120, something like that. And then I ended up running the marketing team for ConsenSys, and then the investment team, the crypto economics team, where we tried unsuccessfully, but tried to design the MetaMask token in the Gensler era. And then about 3 years ago, I joined. I co-founded a venture fund and kind of trying to move along to where I think the innovation and the action is. And these days it is around the machine economy and robot money. So we're going from kind of simple Web 2 automation of the distribution of financial products to the Web 3 automation of manufacturing financial products on blockchain to now, large scale delegated intelligence that is using those financial products in a very different way. So my fund focuses on early stage companies that do robot money things, and there's lots of ways that they can do them.
I think you've been talking about the machine sort of economy for years, and your first company was in like machine economy, was very early. So I'm curious now, as a co-founder of the venture fund and everything, what are all the robo things, or maybe potentially like what are the areas of focus for these robo things? Because agentic economy is like the new buzzword now. It's booming. There's so much potential there. but I think we don't quite understand just the extent of that potential.
Yeah, I think it's too ambitious for me to circumscribe it. I think that, there's different types of people in this market. There are people who enjoy the story of robots shooting money at each other, and it's all science fiction, and let's kind of pump and dump meme coins. And I would say that's a lot of the space. One of the things that crypto has done very poorly is it's taken like legitimate opportunities and use those opportunities as a costume to launch vaporware and fraud into markets. And we've done this with gaming, we've done this with social, we've done this with InfoFi, we've done this with the first path of crypto AI, we've done this with Deepin. So we are the reasons that we can't have nice things. So I just kind of like caveat that problem. And I'd say that's 95% of what's going on. There is another corner of the world where you have people who understand financial services, and financial services is not one industry. It's 5 big verticals, each one of which can be subdivided into hundreds of subsectors. Those verticals are, I hope I got my numbers right. Payments, so you have money in motion. Once the money moves around, it ends up landing somewhere. So that's banking and depository. And once the money is sitting around at rest, you need to start doing things with it. So you get lending, you put it at risk so you can underwrite things. And then that extends to trading and investing in capital markets. And then the last one is insurance, right? So underwriting sort of the core uncertainty in the world. That's not super fair, but like those are the large buckets of companies. And historically, each of these parts of financial services had completely different infrastructure, so like not even anything in common. So a broker-dealer portfolio management system has nothing whatsoever in common in the US. In other parts of the world, maybe, but with a core banking system. A payment rail has nothing to do with insurance. In the same way, when you invest in venture capital, you have no connection to the fixed income capital markets. When you pay for something, when you buy a sandwich, you can't use stocks held in your brokerage account, right? So like these are enormous markets. This is about 25% of the world GDP. What blockchain's done is collapse all of those into a single rail. This is unbelievably destructive, and we haven't like even sorted the implications. Destructive for all of the Scotch tape, technology that is holding up the existing financial services. It is extremely productive for rebuilding from scratch on a single shared digital asset ledger that everybody can use to manufacture financial products of any kind. So in our world, as any crypto user knows, you can buy a sandwich with your Apple stock, right? You just need to have an Apple stock and a card against that account, and then you can use the card and it will automatically, sell and blah, blah, blah. It's trivial. It's like not a difficult problem in crypto, but it's an impossible problem elsewhere. So you need kind of an understanding of these different verticals, and there are different people, there are people who know payments, there are people who know banking, there are people who know investment. You want to generally keep them separate. Like you want to keep the trading people away from the investment people, because the trading people like create Robinhood and drive everybody's savings to zero, and the investment people create ETFs, and then the entire market is correlated with 100%, right? Like it's different stuff. Separate from this, you need people who understand artificial intelligence on some technical level. Like you don't have to be training models or be a quant, but you need to like understand what the thing is and what its potential is. And I think again in our industry, it's been fairly difficult to find people who are curious and interested enough and technical to actually like run the software and experiment with it and not just use it as decoration. And so from the fund perspective, we're seeing lots of this stuff kind of smushed together. So there's some companies that are very AI first and then have a little bit of an idea about agentic wallets or payments. Then you have stablecoin companies that have been building stablecoin orchestration and are now trying to sell into the AI world. and that's the payments layer, for example. In capital markets, it's a bit more obvious. We've had machine learning in capital markets for a long time. Equity markets are primarily algorithmic. Most of the volume is fake and spoofed in order to hide information and so on, right? So that's only come to crypto markets. So there's a lot of sort of machine learning in capital markets, and now there's kind of questions about self-driving money or agents managing their own treasury or doing their own issuance. So things like virtuals, or in the Lobster world, it would be the Claunch platforms, like the sort of Clanker stuff. I know I'm sounding like a crazy person, but these things exist. So that's payments in capital markets, and I would say that that's most of it. You've got vault technologies, which are asset management. They're the closest to asset management. And so all of these companies are kind of in the context of how do you sell financial services into a world where AI is the customer. There are other approaches to crypto AI that we see. Often it is, how do you take the structure of crypto, like the organizational economy of crypto, and apply it to existing AI products? And so decentralized GPU networks, various deepins to collecting data, using tokens to kind of incentivize the mining of data, storage, and so on and so forth. These things are a little bit skeuomorphic, and they're sort of, I think it's product market fit is worse, but there are real revenue pools. And so we do have a bunch of investments in companies like that because they, they have a clear person they're going after, and it sort of works. But those are much more like, how do you do AI using crypto primitives? There's lots of other stuff at the edges, but in terms of like our thesis, it's not as material. So I'll pause there.
No, that's super helpful to kind of understand. And I wanted to dig a bit deeper into your perspective of how the space is evolving as well, because it's moving at light speed, and Generative Ventures was not, founded 2 months ago, sort of when the Lobster took over everyone's timeline. It was way before. So I'm curious of like, what maybe are the latest developments that you see? Because the new updates are coming out every day. I can barely keep up. What are you most excited about, and where do you see kind of the opportunity maybe for the financial services more so?
Yeah, I think it's all a single thread. If you look at, I think it's good to have history here. There are a whole bunch of writers who saw this, not like in 2023 or 2010 that I can point to, but back in 1992, and earlier. Evan Kelly, who was the founder of Wired magazine a long time ago, is a fantastic writer, has an idea called the technium, which is, like we have the biological world, and then there's like a technological world, and the technological world wants something, wants to express itself, and it's been cumulatively adding to itself and to its network. And once we as humanity have uploaded a material portion of our data into it, it has now learned how to do inference and how to create instantiations that have economic actions. There's a whole bunch of stuff from Kurzweil around the singularity. There's lots and lots of sort of thinking that shows that this whole thing is a continuum, and things that were automated a little bit before in workflows or sort of like logical patterns are now being automated at large scale, probabilistically. It's hard to know if we are kind of going on an exponential curve or if we're going on an S curve. So the difference is an S curve feels exponential until you reach like 95 or 100% penetration, and then it stops. So like the number of people that listen to radio, or the number of people that have the internet, or the number of users that are on social media, right? In the early days, it's exponential, and then it flattens out because it's adopted. The same thing you can kind of say about capabilities of AI, so like 2012 image recognition. It seemed to be getting better and better and better and better, right? Like until it reached human levels, and now it's at human levels, and it doesn't get to be like superhuman vision. It doesn't make sense. So I think we don't know if like AI is gonna, in the current sense of like big LLMs, if we're going to top out at the best performance of a human being anywhere for everything, or, if it's going to continue going past that. I'm saying that because what are we seeing? Like, we are seeing these big skyscrapers full of intelligence, right? OpenAI, Anthropic, Google, and so on. So if you've ever watched Blade Runner or Alien or any movie that has like a horrible brain that you need to blow up at the top of a skyscraper, like, you know what they are. Like, we're building them. Like, there's a data center that costs whatever it is, $60 billion with a bunch of like artificial brains in it, right? And that's what we're going to have to shut down using a helicopter and like Arnold Schwarzenegger. But then the other vision of the future is not like these giant vats of intelligence, but, individual robots that live in the home, right? Like the sort of Futurama or the Jetsons, right? Like where they're pets, they're individuals. And so this is kind of a push and pull, right? Is like, how do you take this like horrible, unknown intelligence from a skyscraper and shove it into a little bit agent that has a personality that people can interact with? And I think as human beings, we want a counterparty that feels human to us as well. So we prefer them to be individuals. And so this keeps coming and leaving. The first wave that we saw of this was Autonolas, or now it's called Olas. It was a framework, agentic framework in crypto that ended up running to like 1.5 billion market cap, was very hyped up and is now down to like 10 million. So it kind of came in and went as a fashion. The next one is virtuals, right? So virtuals ran up to whatever it is, 5 billion, went up and is now down to 200 million. So it was absolutely a trend, and now it is absolutely, not a trend. I'm being unkind, but, in terms of just pure market cap. And I'm, by the way, pretty bullish on virtuals. I think they do have a lot going on. And now we're seeing the same thing with OpenClaw and with Lobsters, right? So I think we have this like enormous fashion, and they're very cool because you can finally own one. You can own an agent that is dedicated to a device. It feels like you have it, as if you control it. It can have like a personality, although not that different from virtuals, and then it can do things on your behalf. And now that it can do things, it can actually create some consumer surplus. We haven't seen like very commercial Lobsters, in that, like, what can they do? They like spin up a clone of a website, or they like gate access to a PDF. Maybe some of them launch some meme coins, but it's not super commercial yet, but you can start to see it. It's more real than it was with virtuals, and virtuals was more real than it was with Olas. And so even if the Lobsters go away, we're going to have the next one and the next one and the next one, and that's going to take us across this S-curve. And the S-curve ends at the agent is your peer in every single manner. And as a peer, it needs financial capability, and it needs financial capability across the things I have mentioned, right? And it's like too many things to say about it. You need a cap table, you need bank accounts, you need payments, maybe there's trading, you need commerce, it needs to consume things, it needs a CFO, it needs to manage its own finances, and so on and so on and so forth.
Alex, I have a question, which is, number one, this is really amazing. And I love to talk to someone who actually understands the intersection of both of these things. Because I think as people who've been, we've been in crypto for, here at Myosin, and I think, like, we've been dabbling and getting deeper and deeper, I think, into the AI space, right? Like, I think when and my background prior to all this, right, was just, traditional tech as well. But I think the thing I've been kind of noodling on for quite a while is, as we know, right, like Visa, MasterCard, all these fintech players are starting to, they've been thinking about crypto for quite a while, right? I don't think they're anywhere close to where they probably need to be on the AI side and the agentic side. Frankly, even for us here in the industry, it's progressing at a rate that it's just mind-boggling, right? Like, I've been setting up my OpenClaw for 2 weeks, and it's just moving at a pace where you're like, oh my God, so I got to get my OpenClaw to continue to upgrade its own, its repos and whatnot. But I guess what I'm really getting at here is this weird thing of, I guess what I've been noodling on for for the past like couple months and whatnot is it does, at least on the payment side, let's put it this way, right? Like so much of crypto, I think, has been thinking about payments, and it's the most obvious quote unquote use case, right? Of payments are going to be sent on crypto rails, whatever. Agents are going to be using crypto rails. And Visa and MasterCard obviously have been getting deeper into crypto in some way or another, right? They've been playing around with it. They've been experimenting. They've been investing. And now suddenly agents come into the picture in a way that I don't think anyone was really prepared for. Maybe. I'm a big believer in like the exponential age. Raoul Paul, right? I'm sure you're more than familiar. So I guess my question on all that is, what is your take, right? Like, I guess what I'm getting at is with, it has seemed to me in the past couple of years that Visa and MasterCard are so big that it's very difficult to disintermediate these players. But I will say in the past, I don't know, few months or so, with what we've seen with OpenClaw and other agents and whatever else, it's like maybe there is a world in which they could be disintermediated. But at the same time, I think that another thing came out recently. And by the way, right, like what was it, like Citrini research or whatever, right, came out and was like, everyone's stock price is plummeting, right? So we're also entering this weird public equity situation where research is coming out, everyone's freaking out about AI. Do you think they will be disintermediated rapidly and it's inevitable, or do you think they'll be able to capitalize on it? Or I don't know. I guess it's more like kind of this future state question because the reality is, like, let's be honest, like my grandmother's not using agents anytime soon. My mother and my father aren't, and I'm assuming none of our parents are, right? And it will take a second. Most people, let's be clear, aren't using OpenClaw, right? Not saying it won't happen in the next couple of years, or whatever the hell the next thing is that makes it simpler. But I'm curious to get your take on, how rapidly do you think this is going to happen? How rapidly do you think Visa and MasterCard, at least on the payments front, will be disintermediated? And what's coming up next? Yeah.
It was the worst of times. It was the best of times.
I love it. Okay.
Yeah. I don't know if I'm not sure whether Visa and MasterCard are what matters. Visa and MasterCard are some of the best businesses that have ever been built, ever.
Yep.
They have a full monopoly. They are impossible to remove, and they continue to integrate every single new network that launches everywhere in the world. And they have massive network effects, meaning the bigger they are, the better they are. So I don't think the goal is to attack Visa and MasterCard because it's sort of a dead end. If you go back 10 years, for example, and look at the stock price of Goldman Sachs and Visa, and then trace it forward, that will show you the value of network effects. So Visa is like a 500 billion plus company, which is like shocking. Because I remember starting out, in my career, and I was like, oh yeah, Visa's like some sleepy IT for banks, like ugh. And no, like Visa is more valuable than like all of these other banks combined that run on its rails. JP Morgan there's network businesses inside of the largest banks, which is why a JP Morgan or an HSBC, are large, but the network businesses are defensible. The I have a bank account businesses are not the actual important thing. So I think we also see the traditional industry and the new industry growing side by side. I think the closest example is the internet. During the internet, if you had a choice of two jobs, job number one is you get to build Amazon, and job number two is you get to digitize Kmart. Okay, you don't get to work at Walmart. You get number two, Kmart. Okay. Which is the better choice? To start with a huge lead with Kmart and bring it into the internet age, or to build Amazon? And the answer is written in history, which is it's better to start fresh on a new, in a new venue, rather than bring the baggage of the old venue over. Now, that doesn't mean Walmart doesn't survive. It's just that Kmart and, S-Mart and M-Mart and all the other alphabet marts are dead, like all the way dead. Bankruptcy, no one cares they existed. They're done ever. And so, my hope, I don't have evidence, I'm not sure about the outcome, but my hope is that Web3 is sort of like this for finance, right? Like there's a whole, like finance is much stickier than Kmart because of regulations and power, regulatory capture, but also because it's useful and it works, and like it's not failing people, and it's pretty digital. Most people have no idea the difference between Web 2 and Web 3 and never will. So Web 3 so far has been much more incremental. And on top of that, the market structure and market participants that the crypto industry has offered to the world have so far been of such profound low quality that nobody should engage in these markets, with some exceptions. But, would I much rather build a Web3 native sort of firm that is sort of hyper-targeted at an AI-first world, or do I want to kind of retrofit the Visa and MasterCard network or retrofit Stripe into it? Yeah, I think these are both fair bets, and I think that they have different outcomes. Like, would I rather own Stripe or would I rather own Tether? I think I'd rather own Tether because Tether's got like 60 people making a few billion every year, and Stripe per person. That's not true. Only a couple of 100 million per person every year. Or Stripe, is a big Web2 company. They're now $150 billion valuation. Everybody's fantastically successful. Their product is vertically integrated. People love them. They're a great company, but now they're trying to build Tempo, and they, paid $1 billion for Bridge based on, and they're doing all these acquisitions.
Trying to become a bank, as we know. Yeah.
Yeah. They're doing all this stuff, right? So they are Walmart. They're the Web 2 Walmart trying to be the Web 3 Tether.
It's somewhat inevitable in many of these cases, right? The larger you grow,
it all ends up converging. Yeah. It all ends up converging. I have seen like fintech innovation themes, like, my first company was a robo-advisor, which meant like we automated asset allocation for people on the web before people used finance on the web. Everybody used to go to a branch or talk to a human being. And what felt at the time very revolutionary, in the end, probably clipped off, 200 to 500 billion of assets max in total. And most of the banks responded, so Charles Schwab has its own robo-advisor, Fidelity has its own robo-advisor. Like, it wasn't disruptive enough for the traditional industry to matter. And so it didn't clip off a big chunk of existing revenue. In trading, like the neo-brokers like Robinhood have become much more successful, right? So like Robinhood is extremely dangerous for a Schwab or a Fidelity. They've taken meaningful business away from them. And so has Coinbase. Like Coinbase is really dangerous for Morgan Stanley. And, Coinbase is worth how many Deutsche Banks today, right? So there are financial firms that did hit the zeitgeist and become much more material to the industry. I don't really know in this sort of like AI stablecoin agentic thing, like what the end result is. It just feels like robots want robot money, and it's and it's very clear what's not robot money.
Yeah, and I wanted to kind of we are, focused on marketing first and foremost, and given your, background with ConsenSys and run your company, and with the agentic, economy and everything, you mentioned that in the future, we'll have this companion and whatnot that's probably gonna do, the most mundane tasks and everything. So the agents are gonna have their agent money, and how do you see, or maybe you have an idea of how the marketing will evolve then? How do we market to agents now that we're, super focused on humans, but in the future, obviously, the game's completely changed?
Yeah, I mean, this is a really hard question. And I guess, Blake, you asked me about sort of the endpoint that I believe in. I think the natural sort of effect of the internet and of putting all people and globalizing them on a single network is like huge power law asymmetries. So if you think about it for like music, the craft of like music, in the 1600s, Like every village has like the best person playing the lyre or something, right? Like you want music, you go to like David the bard who lives in the bard house, and that person's got like a thing. They have a whole identity and meaning, and nobody's competing with David the bard because there's no other people who know how to play the musical instrument. You fast forward to the invention of the record player, and it's like pretty bad for David the bard because there's like a lot of other bards and they're a bit better, and so people start collecting records, and that starts to centralize attention towards popular musicians and artists. And then you have the radio, right, which sort of decimates the long tail of musicians. And then you have the internet and YouTube. And right now, the asymmetry is, that's exponential asymmetry, right? Like the power laws of being Taylor Swift versus like David the Bard are pretty clear. So the same thing is true for money, right? Like the asymmetry of being Elon Musk versus like Elon Musk, but like can't do it is like, right? The Elon Musk who can't do it has no money, is in the wrong country, can't have access to banking accounts, and is seen as like an autistic, sort of like incompetent. The Elon Musk who was in the right place and had the right levers is the richest person in the world and is only going to compound that more and more and more. And so you have this kind of core asymmetry. There's also this asymmetry between producers and consumers on the internet. There are people who make content, there are people who lead opinions, and who, now this is a financial activity, right? So as you know, that marketing drives dollars. In Asia, KOLs are how you organize investments. In the US, you still sort of have some semblance of fiduciary duty, but still like driving opinion is highly monetizable. I think that the sort of like addiction to social media and the lack of independence is the opposite, which is a consuming of data, lower IQs, lower attention span. All this stuff is in the data. And so as more and more agents come into the market, agents are just thoughts that people have, right? Like software is just like things that people have written down, or recursively, people have written down software, which has written down software, which has written down its own software. So, but it still comes as like a thought or a concept. And so there's going to be a whole bunch of people that are consuming this, dead internet theory style. And then there's going to be very, very few people who have authorship. And so I think that's kind of that's unfortunately the natural outcome, right? Is that the more successful agent marketing becomes, the fewer actual people will be receiving that marketing. And then the people who will be persuaded by it are going to be like the worst customers, like the people who are the least sort of capable of making decisions and are sort of like prone to propaganda. So I've got a pretty, I guess a pretty dystopian view, mostly based on like how things have gone so far. Some of my hopes about crypto being a decentralizing force that like gives us back our self-sovereignty have clearly turned out to be religious delusions that I had that are wrong. Like it's just not the case. So I think as it comes to the marketing profession, like it's a bit of a race, right? It's a race to figure out these tools and make them appear human before all the people who don't want to listen to robots figure out that they're talking to a robot. And I'm pretty sure that, if you're on Twitter, you have this experience in the comments of posts that you encounter.
Look at LinkedIn feed. It's all, the scariest part is that a lot of the people just don't even realize. I think we kind of realize because we are in this world, and if you use AI quite a lot yourself, you kind of learn how to navigate it and how to spot it. But I've had multiple, conversations with my like normie friends and the videos that they sent me on Instagram and everything, and it's very clearly AI generated. But
no, like those
the belief that it's real is there.
Well, you're
those
telling
cats
those
are definitely
AI
up.
cats?
They're
Yeah.
definitely up, and they're definitely up at night. They're definitely up at night waking people. And like sometimes I just assume everyone I talk to is a robot on the internet. Like I call them robots. If the people get inside, it is just what it is. If you've got like an anonymous account on the internet, you're definitely a robot.
It's all, we all live in a simulation anyway, so I guess everyone is a robot. But you mentioned that the belief in sovereignty and decentralization was kind of not something that, actually happened in the end for you? And was one of the questions of that we kind of prepped was, were there any other, parts of the thesis, maybe of Generative Ventures or your personal ones, that you had in the past few years but have now changed in this world today?
Yeah. I mean, I can share this sort of personally. So it's not that I don't think we need decentralization or self-sovereignty. I think we need it desperately. It's just I think no one gives a shit, and no one will ever, until literally we're like in a giant meat grinder and they're making like goo out of us. Like at that point, people will be like, oh yeah, we should have like not, uploaded all of our data into Anthropic. But until then, like just nobody will care. And I think it's just it's so much of the crypto space is profoundly like non-commercial, and it's very appealing from like philosophical or religious in the sense of like we believe in it and we have no proof. Like we want it to be true, right? Like Bitcoin is pure and will never be corrupted, and it'll be the answer to like the Fed, which is inflating away our savings. And like I believe, okay, let's put on robes and go to Portugal. Anyway, I think I've talked myself out of the answer. So, one thing I changed my mind on is I think I have pretty good timing in terms of I have a pretty good hit rate on understanding what's going to happen. Going back more than a decade, I think I have pretty bad. I think I'm always rushing. So I think the changes will happen faster because I see them. I'm like, this is obvious. Like, why should anybody be surprised that Anthropic is going to put out of business all these SaaS companies that just put a UI on top of a database? Like, this is what it's for. Like, this is the core thing that obviously it's going to do. Like, you create disposable software. You ask the robot to create you software that you throw away like a paper plate after using it for a couple of months, and you forget about it, and that's fine because it's free. There's no cost of manufacturing. Not everybody has to eat on expensive China software plates. But the market is surprised. And I'm not saying I'm prescient. It just seems to me clear what Anthropic is doing. And so why is the market surprised? And I think it's just people aren't staring at the sun in the same way for a long time. The place where I definitely get it wrong is it takes longer, and then the work is also harder for the entrepreneurs than just because you can see it. Like I can imagine a very clean map of how the world should be. I can create a city on a hill and it's going to look exactly like this. And with the technologies that we have, this is how it all comes together. I write a newsletter to about 110,000 people called the FinTech Blueprint for like 7 years. I write this map constantly about how it's going to happen. It's like literally as public as I can be. And I think that creates the impression that it's easy just because you can see it. The reality is it's not easy. There is a lot of blocking and tackling, meaning destroying other companies, taking their customers, running skunkworks marketing, building a product, trying to fix the product under a huge load. In the case of crypto, like lobbying to change the entire government of the United States. I mean, like that's insane effort, right?
Clarity Act is taking just unreal amounts of effort, and we're not even clear when that'll get passed.
Yeah,
right?
exactly. It's like there's only so much you can derive from first principles when there's the real world, and I think the real world is both slower and faster, and the people who succeed in that real world are not necessarily the people who see the most clearly, but those who end up putting kind of like a toll bridge in the right place. So going back to like Visa or Stripe or Coinbase, how do they charge you 1.5% for a trade? Like, how is that possible? How can they have a custody business where they charge people for just holding crypto? It's worth nothing. Like, you just hold it. Doesn't matter. They just do it. And that's it. They have it, So I think a lot of these like futuristic concepts might end up sitting inside of very kind of like not mundane, but just like the companies that are in the right place rather than the companies that are like the most elegant or beautifully designed to go after it. So that means from an investment perspective, like we have shifted from finding the most beautiful idea ish to finding the most commercial and scrappy founder that has evidence that it's working.
Which is great. And Lex, I hate to do this, but we are coming up towards the end of time, and I want to make sure we're respectful of your time as well. But I'd love to kind of wrap this up with kind of like zooming out a little bit. I think you've already presented us, I think, with some really insightful takes on, obviously crypto, AI, and where this is all headed, especially with some practical. And frankly, I agree with a lot of this on like points of view on, how it's all been going. But zooming out. Right. I'd love to really get your take on, how do I put it? Like, I guess, again, like something I've been thinking a lot about, and I think a lot of people have been thinking about. And, that report from Citrini Research and everyone else that I alluded to earlier, and I'm sure other things, right, is where's this all headed, I guess, from the point of crypto and AI, and what gets you most excited, maybe most specifically, to really like narrow it down to something that you can like sink your teeth into. So it's like, what gets you most excited, and what are you most concerned about as we head into 2026 and the next 4 or 5 years? Because the reality is, like, none of us know. I do believe we are headed into an AI exponential age, but what that really means from a regulatory point of view, from a macro point of view, from governments and all that, it's hard to predict, right? So what gets you most excited, and what gets you most concerned, I guess, or yeah, as we're headed into this next year and couple of years. Yeah.
Yeah, I mean, I don't think that that research piece that says by 28, like everything's gonna fall apart.
And
Because
to
we
be
don't have
clear,
this.
yeah, I'm not saying that's going to be the thing, right? Is it more of a thought exercise? But yeah.
I just don't think that point of view does very much work. It creates, I mean, there are obvious things, okay? There's going to be more robots. They're hardware and software. Whoever owns the robots is going to own the world and all of the economies with them. And the robots are going to use robot money. This is the 3 pillars of my position. It's pretty simple. And so what do I want to do is I want to increase my surface area of exposure to those things. That means invest in these companies. It means build things where I can. I have a lot of limitations, but where I can. We advise companies, participate in events, write about them, just create exposure to these things. Whether there is a terminus where all of it falls apart because, humans are non-economic compared to robots, is sort of pointless. It's like you're in the ocean and you're surfing, and like the waves are coming, and you have all these emotions about the waves, and like one of the waves is really big. And you're like, is it going to get there? Is it not going to get there? Is it going to turn? Like, you have all these feelings. And while you're having these feelings, you're missing the waves that are underneath you, right? So, like, the only thing I can control, like, I can't control 5 years from now. I can look back and sort of plan, and I have a very good map. There is almost no additional benefit for me to improving my map at this point because I spend so much time on it. Although, like, mark to market. But I think just being grounded and participating in stuff and doing it instead of being worried about it is kind of the number one goal. And I think that's the challenge for everybody out there, because we're going to be pushed really strongly into the mode of consumption and into the mode of, sometimes you start talking to ChatGPT and it's like, so interesting, isn't it? And then you're like, you keep going and it's like, it's still more interesting. And it's like insight after insight after insight. And like time has passed, and like you talk to a robot for a lot of time, nothing has happened. It's just you and your phone. You just sat in a stupor, you've done nothing. You might have some takeaways, but like if that's just constantly your habit and you're consuming and you're not producing, then you don't have exposure to the real world. And so that, that's abstract, but it is as micro of an advice that I can give you.
Yeah, it makes a lot of sense. Lex, as we wrap things up, I wanted to, typically we kind of jump into rapid fire questions, but for the sake of time, I realized we should probably be, condense that a little bit, if you don't mind. So I think what we always love to wrap things up with is one final question, which is really just, is something, we've been doing a variation of this podcast for, I think, the past couple of years now. And we've asked every single guest this you know, from all types of companies and backgrounds, whatnot. But I think the main thing is really just, and it's a fun one. It's a personal reflection, which is as you look back on this last year, right, with everything that you've been doing with Generative Ventures and your own professional career and whatnot. Um, what would you say is your biggest professional learning looking back on all this?
That's a really tough one. I'll give you kind of an approach I take, which is
Mm,
I grew up doing a lot of visual arts, and then I also had this kind of like finance track that I did, um, and one lesson you get out of the visual arts is to be unafraid to turn the page, right? So
mm,
you work on a
yeah,
piece, finish the piece, then it's done. Then you turn the page and you got a blank page and there's nothing on the page. There's just you,
yeah,
your mind. And then there's two things you have to do. Number one is you have to decide what and how you're going to render something. And then number two is you're going to have to render it. And so you have to learn to not be afraid of both of those things. So kind of in my career, I've done a lot of what people think are pivots, even though they're basically, in my view, I've just done robot money for like 15 years. But people are like, oh, you've been like a founder, and then like you worked in an equity research firm, and then you like were an operator at ConsenSys, and now you're a venture investor. Like, how did you do all these different things? They're all the same thing for me. They're just different pages, that I start coloring in. And they're rendered in different ways. To build a venture firm is different than to build a marketing team, is different than to build a startup, is different than to build some research reports. And I think it's just kind of being unafraid of doing the new thing, and if anything, sort
yeah.
of wanting to be able to do that.
That, yeah, and I,
That
I
is
can personally
amazing.
resonate because that was so much of my career as well. You know, yeah, that's all it is like we're all kind of the metaphor I always use is we're all trying to get to the thing is like what's your vision, what you're trying to get to, and then how do you hop in between to get to that point, right? From stone to stone, and we're figuring it out.
There
Um,
you go.
Mhm.
all right, brilliant. So
Cool.
with all that being said, Lex, I think we gotta let you go. I'm sure you're quite busy. So with all that being said, thanks so much. This is a really great conversation. Any
Thank
final
you.
calls to action or things that you're looking for people to,
Yeah, just
wish
check
them to
out
check out? Yeah,
FinTech Blueprint is my newsletter. I also have an AI one called Future Blueprint, and then Generative Ventures is genventures.xyz.
Awesome.
brilliant.
Thank you.
All
Thank
right.
you.
Thanks so much, Lex. How we going? Ciao.
See you online. Ciao.
See you online.